Hey everybody, what's up? We are back with another stock analysis, and I have a special treat for you today. We are looking into Krispy Kreme, which honestly, I had no clue was even a public company, but apparently they are. Um, been on a decline since the day of their IPO, which is pretty rough, but we're going to get into them, look at their financials, go over a couple other things, their earnings report, and just see what's going on. So make sure to like, comment, and subscribe. It is a great help to the channel and greatly appreciated. And saying that, let's get into the video. So, getting into Krispy Kreme today, if you don't know what they are, donuts. Based on the stock ticker, you may be able to figure that out, but they do donuts and a couple of other donut related products. So, market cap just dipped below $1 billion for what I'm assuming is the first time in a long time. They are down a lot today, 9% this current week. As you can see at their IPO, they did pop up for about 2 weeks, and since then they have been down consistently. Um, and very aggressively as of their last earnings report, which is what we will be going through today. So, saying that, let's start moving through it. So, again, just under $1 billion market cap. They have a 2.8% dividend yield, which is very shocking considering it is a company that IPO'd only 4 years ago. Um, can't imagine that's helping them out too much considering the stock price. Target price is currently at $11 with a 14% long-term growth rate. So, that is more than double the current price of $5. But overall, I'm just not really seeing the results that would point towards that higher price. Looking at the growth summary, pretty mixed with a lot of negatives. Even the longer term numbers here are also not very high. So overall, I would say that's pretty negative. Also, just to make sure I don't forget to cover it, right now, the price to earnings ratio is at, for the next 12 months, is going to be 58. Let's look at the, man, sorry I keep zooming in and out here. I just have a lot of stuff going on in the brain that I want to cover. So the most recent full year PE was at 90. Next year it is set to be at 86. That is so unbelievably high that, considering this company is already incredibly low in its stock price, it seems like they're probably going to lose 2/3 of their value if they want to regain a fair PE ratio, which is not great. So anyway, let's look at those competitors. I doubt they're going to have too many. And if they do, they will probably be much larger companies, but that's just my opinion right now. I'm not actually really sure. So let's look into it here. Okay, Domino's Pizza is one of them. And looking in here, we do have a couple crazy numbers here. So first of all, let me just actually center this. Krispy Kreme's is the highest by far. Also, for the next 2 years, they are expected to be way higher than the averages on top of that. Apparently, within 2 years, their PE is going to be all the way down to 25. Will that actually happen? It would shock me, because that would take an enormous amount of either sales growth or their stock price dropping a lot, which both, I can imagine their stock price dropping, but it does not seem like the sales growth is going to be too crazy. Let's get into the earnings now and see how they've been doing. So this is the report that made them drop 30-ish%. Let's see what the actual number is. Let me just check out how much they actually dropped on this report. So down almost 22%, followed by another 16% the next day. That's insane. So they were just about at $9 a share, and within 2 days after that, they were below $6 a share. That's got to be rough. That's all I've got for it. That's got to be pretty rough. So full year net revenue of 1.7 billion and full year revenue growth of 5%. Net income was 404 million. Organic revenue grew 1.8% and was impacted by an estimated 2.8% based on the cybersecurity incident. Okay, whatever. EBITDA of 45 million, again impacted by the cybersecurity incident. Now, I have reviewed probably close to 100 companies or more since that cybersecurity incident, and this is the first time I'm seeing a company using it as an excuse for poor performance in their earnings report. At least that I remember, which is kind of interesting. Either way, let's keep moving through here. So full year highlights, again, revenue growing, again, mentioning the cybersecurity incident twice. So 18th consecutive quarter of year over year growth, excluding again the incident, were largely in line with expectations. Um, can we see why? So this is a lot of just the same stuff we've been going through. Okay, 2025 financial outlook. Net revenue of 1.5 to 1.6, organic revenue growth of 5 to 7%, and I'm not seeing anything that would cause a 35% drop. Unfortunately, they do not have a street takeaways, which would really help me out here because I am not seeing exactly where this enormous drop is coming from. Looking through, I'm not 100% sure, but it just seems like the report was fairly decent. And the let's see, the outlook of 1.5 to 1.6 for full year 2025. Let's see, full year highlights. Okay, that makes more sense. So they're expecting less revenue year over year. Organic growth will see. Now this is strange. They are expecting positive organic growth but less net revenue. Is that right? Organic revenue growth of 5 to 7%. Non-GAAP, okay, yeah. Non-GAAP figures showing revenue growth, but the actual net revenue will be either exactly the same or lower than what they're actually projecting significantly lower net revenue, which is not good at all when they also boast about revenue growth twice in this. But either way, let's move on to the financials now and see what we're getting into. So starting off with the income statement, and okay, so year over year, once again, I'm not really getting that. I understand the non-GAAP part, but why are they boasting year-over-year revenue growth when they had a decline in total sales? That doesn't make too much sense to me. What are you doing, Krispy Kreme? Come on. One thing I will say is that 2024 was their first year since going public that they were net profitable, which is something. That is a thing that they did, which I guess. Um, Operating income has always been positive, though, and actually it has been declining for 4 straight years, which isn't really too great. So the fact that they have a net income profit while their operating income has been declining every single year is a little concerning. um not entirely sure how that even happens, but it did happen and they did make a profit. So that is something. Their EPS is now positive, which I believe is why their PE ratio is so high, is because their EPS is incredibly low. So that's just kind of how it works out. Total shares are increasing, but only very slightly every year. So that's nothing to be too concerned about. Let's head into the balance sheet and see what's going on. So just under 30 million in cash with a total debt of about 1.35 billion dollars. That is a bit above 100% debt to equity ratio, which is not great at all. Plus that very little amount of cash is, let's actually go back here and look at interest expense of 67 million. That is not enough cash to cover their interest expense, which is not good at all. I don't even usually cover that, but that's usually because companies have more than enough cash. That's not good at all. I'd imagine their cash runway for the company, which again, for a company this big, you usually don't have to talk about cash runways, but I would imagine theirs is not very long. And saying that, free cash flow has been negative for 2 consecutive years as well. Um, Anyway, let's start from the top here. So, operating cash flows have decreased significantly over the past 3 to 4 years, which is not good at all. Changes in working capital is definitely a big contributor to that, and also a decrease in the funds from operations. Investing activities, we are seeing them sell off fixed assets and businesses. There is a little bit of small acquisitions happening, but overall, it's not a crazy number. Yeah. So financing activities, again, I feel like this company should not be paying a dividend. With negative free cash flow, outlook looking not great, total sales are decreasing and projected to decrease further. why are they still paying dividends, especially being an under $1 billion company? That is kind of crazy. They have been repurchasing stock too, which again, what that's also pretty wild, considering how little cash they have as well. I wouldn't be shocked to see this dividend get cut. um but that's just my opinion. Um, so overall, biggest takeaway: negative free cash flow for 2 consecutive years. Do I need to look at the ratios? I guess I can. They're just going to be pretty bad. Gross margin declined year over year by over 1%. SGA to sales increased, which is negative. Operating margin is almost negative. Um, Big fall off there. Net margin saw an improvement, but again, I don't know how. SGA to sales increase, which means more costs. Operating margin fell, less profit, but then net margin went up. How does that happen? I don't know. Please let me know if you know. And also, debt to equity, again, almost at 120%. That is not a great number, especially for smaller companies, especially for companies where their interest expense is double the amount of cash that they currently have. That is terrible. So, saying that, overall review of the big DNUT here, aka Krispy Kreme, is that they are doing a not good job. Let's look at this dividend: 0.35, 35, 35. What is the next one? 35. Okay, dividend is staying the same, and they still have it listed here, so I'm assuming it wasn't cut. That is another thing I can see. Um, Let me look at last quarter. We announced we were aligning our talent and capital to our business priorities and have taken significant action, restructured our teams, U.S. expansion, and capital light international growth. We expect to soon award contracts to outsource U.S. logistics. Finally, we've begun a process to refranchise international markets. I believe these changes will drive capital efficient growth as we continue our transformation into a bigger and better Krispy Kreme. The fact that they have the audacity to say bigger and better after dropping this isn't even an exact number, but just going off the very bottom of where their IPO price is, they are down 68%. Um, will it be bigger and better? I don't think so. They haven't really been doing anything good from what I could see. Sales are dropping now for 2 consecutive years almost. Um, that's all I got for today. Also, another thing to note, they have 23,000 employees back in 2022. How do they have that many, first of all? And on top of that, also 2 consecutive years of declines in their workforce. So that doesn't paint a super positive picture for future growth either. But even still, 20,000 plus employees for a less than $1 billion company that has no money, pays a dividend, interest expenses double its cash. There's something not right here. That's all I'm gonna say. There's something not right. Seems like they don't have a lot of time left, if I'm being honest. I love Krispy Kreme donuts. They are really good, but it does not look too good for them. Saying that, that's all I have for today. Thank you so much for watching. Make sure to subscribe if you have not already. Every little bit is greatly appreciated. And I will see everybody in the next video.